Yeah.
Okay, bad trades. So I think there's more information below. Okay, so price broke an uptrend, forming a head and shoulders formation. So I decided to go short after waiting. The price broke the super trend indicator, I'm assuming. However, the
Yes.
retracement was too strong and price hit the stop loss. Should probably move my stop loss upper to the previous high and resistance line. Okay, got it. Okay.
So
So
I
the option
also,
line. Yep. Go on.
yes.
I'll let you sort of break it down for me.
So just so you know, I use mainly the Heikin Ashi candlestick
Yep.
to enter a trade, but
Yep.
for management and to have better entry on the stop loss and target, I also use
Yep.
the Japanese candlestick. That's why this is present too.
Yep.
So for me, the chart show head and shoulder. Maybe
Mhm.
it wasn't one, but I think it was. So I expected price to go next to either to go down or
Yep.
to retrace, maybe to retrace to the green horizontal or maybe not nearly horizontal line,
Yep.
but it go higher. So it break my prices. But
Mm.
after that, it go to the target. So
Okay. Okay. Um, okay. So let me break it down to sort of how I see it, and sort of I can outline where I believe is your mistake. Okay.
mhm,
Okay, so when we're looking at your analysis, you've got support and resistance lines that you've applied. Okay, so you've applied support, resistance
yes.
lines. I don't really see a resistance line up at the high, so you don't really highlight the resistance up there, but you've defined sort of a region over here, a couple of sort of supports. Zones over here as well. Okay, so you've highlighted this. You've got an uptrend line, beautiful uptrend line. Prices, on the incline. Um, You've got your super trend and parabolic SL indicators applied to this as well, and you've got the
Yes.
Heikin Ashi charts. Okay, you've perfectly outlined a head and shoulders formation. One of the first things I look for in regards to the head and shoulders formation is the prior trend. So I can see, this is almost a double bottom here, right? So you've got a double bottom, you've got a
Yes.
prior trend. I'm looking for 1.5 the size of that head and shoulders pattern, right? So you do have that. So you've got a strong uptrend, you've got a head and shoulders formation. So you've got the left shoulder, the head, and the right shoulder. You've applied the neckline correctly, okay, and price breaks through the neckline. Okay, so it breaks through the neckline. It also then breaks through at the same time your trend line. So how comes you did not enter there?
Because I wanted to have, as I used the Heikin Ashi and Super Trend to enter trade, I wanted to break the break of the Super Trend.
Yeah.
Because when the super trend is below the price, I only look at to buy, and when
Mhm.
it's above, I only look at to sell.
Okay.
That's why I
Right.
wanted this information before entering a trade.
Okay.
Trade.
Something to sort of mention here is that you're using different indicators on the same time frame, right? So on this time, on the sort of your second chart over here, same asset, same time frame, but we've got
Yes.
Bollinger Bands. So you've applied the Bollinger Bands. You've got volume, just over here. You've got a moving average, 214 period moving average, right? And you're looking at candlestick analysis, and you've got RSI set to 14 periods on the close, and it's done in the step version, right? So it's not the sort of the line
Yes.
version; it's a step version, right? Okay,
Yes.
fine. I
But
like
I
sort of the.
only
Go on.
yeah, I only use that to manage my trades
Yeah.
on when I want a clear vision of my trades, but not on the main basis.
Okay, okay. So this is almost pre-entry, right? So this is your formation sort of to enter a position. This is thereafter, right? Once you're in the
Yes.
trade, now
Yes.
how you're going to
Yes.
manage the trade. Perfect, right? Okay. Um, you know, okay, so you enter in this region over here, and I mean, if you're trading the head and shoulders, your stop loss should be above the right shoulder, right? So
Ah,
above that
okay.
right shoulder there, right? That's where you stop, right? If you're trading the break of the trend line, if you're taking the trade break of the trend line and you're going for this larger move to the downside, then your stop loss should also be above the right shoulder. That's a more of an aggressive stop loss. Some may even do more conservative stop loss above the entire swing high, right? So above those highs over here to be safe, right? That's where, so it's, stop loss for me was an issue over here because you just placed it literally where sort of you placed it just above the neckline, really. So just above the neckline. I wouldn't really class this as a swing. You don't really class this as a swing, right? So this is the initial candle that breaks through, slight pullback, and then a continuation. So it's not really a swing. It's just above the neckline. So I do believe it's an incorrect stop loss. But something else to note down is that what I like, so I'll tell you sort of a con and a positive. The positive is that I like the fact that you applied another trend line thereafter. Okay, so you're constantly analyzing. Even once you're in the trade, you're analyzing, looking for other opportunities or sort of other regions price can come back to sort of, retest. So that's great, right? So that's great. So it came back to sort of retest this region here. Did it continue to break through, or was this?
No, it go down. Then right after that, it go down.
Oh, that's unfortunate. That's quite unfortunate.
Yes.
Yeah. I mean, when you have a setup like that and it comes and tests that trend line again and it stops you, you should re-enter. What's stopping you from re-entering, right? It's a new setup. It's, going in line with the bigger picture, the sort of the initial idea you had, but almost this is at a much better price to short this, right? So it's giving you a better price to short, a technical reason to enter. There's no harm in re-entering on a position. But what I don't want to see is revenge trading, where you're constantly taking.
Exactly. That's why I'm not very confident to re-enter, because I always feel that it will be a revenge trade and not really always based on facts.
Yes. And something else to mention, just sort of like a quick lesson, right, is generally when you have sort of a uptrend taking place, okay, and you see a formation taking place, right, not all the time it's gonna just start to sell off and really sell off like this, right? It doesn't always do that, right? In that's an extreme rare circumstance, okay? In most cases, what it's going to do is actually it does a correction, a larger correction, and then it continues the trend. Then it continues that trend, right? So remember, you can have a long-term sort of uptrend taking place. It corrects for a short period of time and then continues that trend. Apologies for the drawing, but I try to do it the best I can. But do you know what I mean? So even though you had this head and shoulders pattern, remember that to trade the head and shoulders, you're taking the height sort of where you've defined here, right? So you're taking it from that high to this low, from this point to sort of where that, and that should have been the target, right? So in this region here, that should have been your actual target, not all the way down there, right? So just be cautious when you're trading these large reversal patterns. They're not always reversal patterns. They could be just a consolidation, a pullback, maybe even a retracement. In the extreme cases or rare cases, they are then a reversal.